You are listening to C-Suite Perspectives, a podcast by the Conference Board.
Welcome to C-Suite Perspectives, a signature series by the Conference Board. I'm Malala Lin, Economic Research Associate at the Conference Board and guest host of today's episode. Joining me today is Stephanie Guichard, Senior Economist of Global... Joining me today is Stephanie Guichard, Senior Economist of Global Indicators. In today's conversation, we'll discuss the latest U.S. Consumer Confidence Index, as well as our outlook for the global economy. Welcome, Stephanie.
Hi, Malala.
Last month, we saw the U.S. consumer confidence improve. How are the consumers feeling in June?
So consumers are feeling a bit less happy. Just to give an idea of the numbers, so now consumer confidence in June is at 93, which is below the long-term average of 96. The lowest point this year was in April at 85.7, and then we had a huge rebound in May where the index reached 98.4. But when you look at May, this very strong improvement was boosted by the China-US trade deal on the 12th of May, and basically most of this boost that we saw following the China-US trade deal is gone by now.
Okay, so you're saying, are they still actually concerned about tariffs or not so much?
No, they are. And we ask them every month about what is driving their view of the U.S. economy. And the most frequent response is tariff. And tariffs we've associated with some negative feelings about how tariff are going to impact the economy or the possible impact to inflation. There are a few positive comments on tariffs, but most of the comments around tariffs are negative.
I see. How about we dive into more of the details of the overall measure? So was it the present situation or the expectation measure that drove the changes?
So it's both. And so both measure, whether it's assessment of the present situation or expectations, they both decline and by quite similar amounts. And just before you ask, all the components of each of the indicators also weakened. So it was a broad-based decline. When you look at the two in terms of level, as in previous months, expectation is the weakest of the two, which means that consumers are worried about the future. Present situation, it's still at a decent level, which means that consumers are still relatively happy with the current economic situation. But in any case, both these measures decline in June.
What drove the change in the current conditions gauge?
As I just mentioned, so both components are weakened. So the first component is consumer assessment about business conditions, and they were a bit less optimistic about the current business condition. The other one is job availability. So not only this one also declined, but this was the sixth consecutive decline for job availability. So we have this kind of sliding trend. However, the measure is still positive, which is in line with the still solid labor market, but also with the kind of softening we've seen in recent months.
So what about the expectation measure?
So, as mentioned also, the three components decline. We have two of the components, the expectations regarding future business condition and expectations regarding job availability data in negative territory, so pessimism territory. Consumers are worried about future business condition and future labor market conditions, and this weakened a little bit. The other one is future income. So this one weakened, however, that's the only of the three that is in positive territory, which means that going forward, consumers are still optimistic about their future income. And that's a very important component, because what we can see is they are worried about the economy in general, but they are still okay about their future income, which is very important when you think about the implication of these results for consumption.
So did you see any differences across income or age groups, or what about political affiliation?
So there was no major differences. So basically for most income groups and for all age groups, we saw a decline in confidence. So it was a broad-based decline. It was the same thing for political affiliation when we saw confidence declining for all the different groups. And this is something that we have observed since the beginning of the year, that overall we saw we don't see divergence between different income groups, between different age groups or political affiliation. And this is very new when we look at, let's say, last year. Sometimes we saw older people being more confident or less confident from one month to the next, and the different story for younger people, the same thing with income. And right now there is a lot of convergence in terms of changes.
And are consumers anticipating recession within the next 12 months, according to the survey?
This is a very new measure that we added to the survey recently. So we don't focus so much about the level. The level is pretty high, but what we look at mostly is the change. So there was an increase in June, so a few more consumers expecting a recession than in May. May had seen a huge decline, and so we see a slight rebound in June. We are still lower in terms of recession expectation than earlier this year in March and April, but we are higher than in 2024.
I see. So are there any good news in the survey?
Yeah, there are a few good news in the survey. One of them is future financial situations. We ask consumers, and it's not part of the index every month, if they think that their financial situation right now is good or not. So this one declined a little bit. So it's still positive, but it's still good, but not as good as in May. However, we asked them about their future financial situation, and we saw a substantial improvement in June. And the other good news that is likely linked also to their assessment of future financial situation is inflation expectation. So we saw a decline in inflation expectation to 6%. It was 7% in April, and 6.4 in May. So we have this regular decline since the peak in April, but it's still higher than it was at the end of last year. But overall, this is good news, and we've seen in the past that when inflation expectation slow, we see an improvement in consumer expected financial situation, which really makes sense.
I see. And what about the stock market? Are consumers optimistic about the future of stock prices?
Yes, they are. And so there was a rebound in May after a massive drop in April. And we've seen it also in terms of stock prices. So stock prices have improved, and so consumers are optimistic about where they're going to go next. So yes, this is one of the few measures that's also improved in June, and you can also link it to consumers' assessment of their future financial situations. For those who have stocks, who 401k, they see some improvement in stock prices. They think that this is going to continue, and so they are more optimistic about their financial situation going forward.
Okay, that makes sense now, that if we can talk about their purchasing plans, since they're more positive about their financial situations. So going forward, are consumers changing their plans for purchasing big ticket items?
If you compare to May, we ask consumers whether they are planning to buy big ticket items in the next 6 months. Yes, no, maybe. And what we saw is an increase, like a substantial increase of the maybes. So it seems that consumers are more undecided about whether they're going to be buying big ticket items going forward. And then we had some more specific questions in terms of, are you going to buy a refrigerator? Are you going to buy a washing machine? Are you going to buy a smartphone? So what we saw in general is for appliances, it was slightly up, and for electronics, it was more down.
Okay, and did consumers express interest in buying more services ahead?
Yes. They are still planning to buy more services, but a bit less than in May. And we saw most categories of potential service purchase declining slightly. There was a few exceptions, and one of them is dining out. Consumers are more planning to dine out than they were in May. That's good news. And also dining out is, and has been since we started to ask the question, the service on which people are the most planning to spend. So that's good news for the restaurant industry.
Especially for the summer.
Also, we asked consumers about their vacation plans, and overall it didn't change too much. So not sure if it's good news or bad news, but at least they were steady despite the slight decline in confidence.
What about cars and homes?
Different stories there. In terms of buying cars, buying plans were steady at the highest level since December 2024. So it seems that despite the decline in consumer confidence, consumers are still planning to buy cars as much as they were in May. However, for homes, we saw some decline in demand.
Overall, what message are consumers telling us about the second half of the year?
Consumers are entering the second half of the year with still high pessimism about the future. And this is something we've seen for the past 4 years. They are relatively happy about the present, a bit less than last year, but they are still relatively happy about the present. And they are worried about the future. And they are concerned about inflation, they are concerned about prices, they are concerned about the impact of tariffs. So I think consumers are in the wait-and-see mode where they want to see what's going to happen with the economy, with the tariffs, and so they're going to pay lots of attention to inflation and prices to see whether everyone is telling them that with the tariffs, everything is going to be more expensive. So that's something they're going to watch. And the other thing they're going to be watching the labor market very closely. So far, they are still positive about the current situation in the labor market, but as I mentioned earlier, we saw this softening over time, and they are very worried about what's going to happen to the labor market in the future. So they're going to be paying close attention to inflation and prices and the labor market. All of us do.
Great. That was a very insightful summary of the consumer confidence we released this morning. We're going to take a short break and be right back with more of our conversation.
What does the future of work mean for your employees? How will your company navigate ESG? Will there be a global recession? At the Conference Board, our experts translate the latest research and economic analysis into insights and real-time problem solving for your organization. Membership at the Conference Board provides your team with an assortment of knowledge, from economics, marketing and communications, ESG, public policy, and human capital. As a member, you'll have access to our center experts, member-exclusive events, data and benchmarking tools, and peer sharing that will help you understand the present and shape the future. Consider becoming a Conference Board member today by visiting www.conference-board.org.
Welcome back to C-Suite Perspectives. I'm Malala Lin, Economic Research Associate at the Conference Board. I'm joined by Stephanie Guichard, Senior Economist of Global Indicators. We're going to turn the tables and talk about the Conference Board's latest forecast for the global economy.
Thank you, Malala. So let's start right away. What is the latest global forecast? And were there any changes recently to the forecast?
Yeah, so the Conference Board's latest forecast for the global economy was left unchanged this month at 2.9% year over year for 2025 and 2.8% for 2026. But since January, the forecasts for both years, 2025 and 2026, have been downgraded. And these downgrades are largely because of the U.S. implementations of tariffs. But more recently, the U.S. has pulled back on some of the tariffs, and trade negotiations are still happening. But the current forecast reflects the anticipation that the continued uncertainty will still weigh on the global outlook.
Okay, thank you. And if we look at the different economies, whether the aggregate may be unchanged, but maybe you had some shift between the different regions of the world. So if you can take us through those changes.
That's right. So the 2025 forecast for the euro area was raised, but very slightly, from 0.9% to 1%. And really, this slight raise in the forecast follows the stronger than expected GDP for the first quarter of 2025, but also because of good momentum in manufacturing activity. However, there is still the expectation that growth will continue to decelerate in the coming months. There are still challenges that can weigh on the outlook. So, for instance, services activities in the euro area decelerated in May. And there is some demand weakness, and demand expectations continue to soften. And we also saw services inflation drop in May.
Okay, so let's continue going around the world. So what about Asia? I mean, we discussed earlier that there was a pause in some of the tariffs following the US-China deal. Is it relieving some pressure on the outlook for the Chinese economy?
So there have been developments that suggest easing of that pressure going forward. So first, like you said, the de-escalation of the US-China tariff announced in May. This could alleviate pressure on export-driven sectors in China. But also the Chinese central bank has implemented supportive monetary policies, and they cut rates as well to further mitigate any risks to growth. The economy still faces headwinds from weak domestic demand and some lagging property investments, and also the general uncertainty around global trade. But the government is ready to implement necessary measures to further support growth. But overall, the forecast for China was unchanged, and we expect it to remain resilient, the outlook.
Okay, so let's continue. So in the rest of Asia, are there any notable changes to the forecast?
Yeah, so I'll just mention a few. The 2025 forecast for India was upgraded after a stronger than expected GDP in Q1, and inflation has eased as well. For Japan, the forecast was downgraded. This follows a contraction in GDP for Q1. Also, the Japanese auto and steel industries are vulnerable to shocks associated with the U.S. trade war, which is taken into account in this forecast.
Okay, so let's finish with the Western Hemisphere and Latin America's forecast.
The Conference Board forecast for Latin America was upgraded by 0.3 percentage point for 2025. And this is mostly because of a significant improvement in the outlook for Brazil. GDP growth beat expectations in Q1 2025, mostly because of a strong agricultural sector. But growth may moderate in the near term, which would be consistent with the expected impact of tight monetary policy and the persistent concerns about inflation. But I'll also take a second to mention the Mexico forecast, as it was slightly downgraded. The Q1 GDP number was not so great, and coupled with continued trade tensions with the U.S., the forecast is currently at a moderate 0.7% for 2025.
Okay, let's finish with the U.S. So the U.S. outlook was not changed this month.
That's right.
But can you just tell us a bit more how the developments from the U.S. tariffs are playing and how they are affecting the U.S. outlook?
So the quarterly forecast for the U.S. this month reflects the impact of tariffs to show in Q3. But let me backtrack a little bit. After the Q1 contraction, a rebound in GDP growth is expected in Q2 due to a reduction in imports. But in Q3, we expect consumers to pull back on spending, and inflation is projected to rise as well, peaking at above 3% in Q3. So yes, overall, like you said, both the 2025 and the 2026 forecasts was unchanged since May, mostly because there hasn't been any huge developments or significant developments related to tariffs, but it's expected to show up in the coming quarters.
And so the impact of tariffs will really be felt in the third quarter of this year.
That's right.
Okay, so the Conference Board also has a global leading indicator. And so I was wondering what it tells us about the global economy for the second half of the year, and does it confirm overall forecast that the economy is going to be slowing in the second half?
Yeah, the global LEI, the leading indicator, is a forward-looking index. It's supposed to be about 12 months forward, and it has been declining for a while now. But since the end of last year, the growth rate for the LEI reprised a downward trend, and it's moving even deeper into the negative. So this ultimately suggests that headwinds to growth are potentially intensifying. Our next release of the global LEI is next week, so you can look out for that. But perhaps it might tell us a different story, but as for now, the global outlook, according to the global LEI, is not signaling improving conditions at all.
Okay, and I want to talk a bit more about risks. Obviously, the outlook for the global economy is still uncertain. What are the main risks to the outlook? And maybe I should add, so we have a CEO survey, and when we asked CEOs what they saw as the main risk for their own industry, the first one was geopolitical risks, and the second one was tariffs. Do you agree with CEOs that these could be the main risk, and how does it play with our forecast?
So the impacts of tariffs are still front and center, I would say. The downside risks have dialed down since the pauses, and further tariff reductions would improve the forecast. But as for geopolitical risks, I'd expect this to still be the top concerns for CEOs, and I know we're coming out with another CEO survey next month, so we'll see how that turns out. But it is important to note that neither the latest CEO survey nor the current global forecast take into account last week's developments in the Middle East. So while there could be economic impacts globally, it's still too early to tell, and we need to closely monitor the outcomes of the situation, whether it be the ceasefire leading to a peaceful agreement or maybe the tensions will continue to escalate.
Thank you, Malala. So this was a great conversation.
Great to be here. And thank you to all of you for listening to the C-Suite Perspectives. I'm Malala Lin, and this series has been brought to you by the Conference Board.
You have been listening to C-Suite Perspectives, a podcast by the Conference Board.